Good afternoon, CoinSummit. My name is Matt Rozak, and I'm founder of Tally Capital. And Tally invests in Bitcoin and the Bitcoin ecosystem. I've made about a dozen investments over the last year, mostly in the bridges, roads, and tunnels of Bitcoin. So we participate in BitGo's most recent financing, which is an enterprise-grade Bitcoin wallet with multi-sig, and Bitfury's most recent financing. So been very active in the full kind of spectrum of Bitcoin, and continue to invest. I think we've got another 3 deals that we'll probably do in the next 90 days. So welcome. Today we're going to be talking about the economics of Dogecoin mining. Really? You guys want to talk about that? Let's get a sense for the room. So how many people here are entrepreneurs, operators? Okay, great. How many angels, VCs, investors? Okay, so we got the right group. So we're very fortunate to have Shaq and Brock here. These 2 individuals are probably one of the most prolific angel investors in Bitcoin. And I'm honored to be moderating this panel. I typically don't moderate panels, but it's a nice change of pace. I always viewed and continue to view Bitcoin as a generational opportunity for entrepreneurs and investors. Translation, it's a once in a lifetime opportunity for us. And I kind of had the same reaction to Bitcoin as I had when I used a computer for the first time, or a mobile phone, or the internet. It has all the characteristics of this profound change that's ahead of us, and I think we're all part of something really special, and we're just on the front end of it. So let's get this kicked off. If you guys could start by maybe setting the table of how you originally got into Bitcoin, and introduce yourselves.
So I got into Bitcoin investing before I got into Bitcoin, which is quite an interesting way of looking at it. I have a friend who's been looking at many companies, and he came across BitPay, which is around November 2012. And he obviously brought it to me and explained who BitPay were, and this is before BitPay had actually formally launched as a company. There were a couple of individuals, Stephen and Tony, working on a project, and he brought the deal to me and also then spent time explaining Bitcoin to me. So I made the investment first, way before. I'd like to lie and go, hey, I was in it, when it was $1, but that isn't the case. So I made a significant investment in BitPay, and then post that investment, I ended up buying some coins. And just to clarify, because it does get confusing at times, I have about 18 angel investments, but the only one in the digital currency / Bitcoin space is BitPay. I am the founder and major shareholder and main investor at CoinDesk, but since I've launched CoinDesk, I haven't actually done any investments, because it'd be quite unfair if I'm running a news publication in the industry, but also making investments in that industry side. So it's a double-edged sword. So I haven't been able to do any more Bitcoin investments, but I have done lots of non-Bitcoin investments over the last 2 years.
Brock?
Brock, I got into, I guess, digital currency as it related to the gaming world in the late 90s, and pioneered sort of the market for secondary trading around games like EverQuest and World of Warcraft and Second Life. And so digital currency and mining of those digital currencies was not a new idea for me. And I guess in 2009 I was getting pinged infrequently, but by people saying, hey, what do you think of Bitcoin? Expecting me to have a good answer. So had to go learn about it to make sure I had an answer to those questions. Ended up mining a fair amount with one of my partners. I ended up losing all those coins because at the time I wasn't sure if Bitcoin was going to be successful. I recognized fairly early on that the future of money was digital, and that something like Bitcoin was ultimately going to change the world. But what I didn't know is, was that time now or was it 25 years from now? And so I waited until I saw more critical mass in the, or sort of critical mass of activity trading, it was actually happening, and then I've jumped into the space. I've been working, nearly full time for the last 2 years, starting businesses from like an incubation or acceleration sort of perspective, as well as investing in those deals, and fairly active. I think we're probably up to 18 investments year to date. So hopefully by year end it's 52, a deal a week. There's enough exciting entrepreneurs out there doing great things that that might be an achievable goal.
So if you think back over the last 6 months, there's been almost an inconceivable amount of body blows to Bitcoin. Everything from GOX to China to India to Russia, Apple. Obviously, Apple and Russia has kind of gone the other way for the ecosystem. But during that period, if you think about the announcements that were made in April, May, and June in terms of fundings, $10+ million venture fundings, that means in the kind of the Q1 timeframe, these companies were pitching, negotiating, term sheeting, diligencing, documenting, and funding their deals. It's pretty profound how resilient underneath that whole morass and that whole drama, people were still funding deals. And so I think there's been a lot of change in the ecosystem. What have you guys seen in terms of change between kind of 2013 and 2014 from stuff that you're seeing, talent, deals, et cetera? What's kind of the evolution in what you're seeing?
Well, if we touch upon the first question or first topic you raised there, is how resilient the funding ecosystem has been with various nuclear bombs going off in the Bitcoin industry. It's interesting to see the maturity of it, and also investors being more secure and confident that one single event isn't going to wipe the whole industry out overnight. So, there's times when the Mt. Gox scandal happened, there were the naysayers going, well, this is it, it's over. Before that, Silk Road, if you remember when that raid happened, says, oh, Bitcoin is over. I remember a journalist going to me, right, so it's finally over, there are no more pizzas for Bitcoin. So you have that tabloid mentality, and then you have event after event after event, and yeah, there's slight price dips, but then there's slight, price ups as well. So the core belief there has remained, and what it has done is people who were necessarily actively investing have started dabbling, and people who are on the sidelines are now coming into the field to start being active in the space. Talking about companies who've got raised funding, there's been some large funding amounts. BitPay was one of those, Go's another one. These are seasoned operators, who've built companies before, and they've obviously been having these conversations for the last 18 months. And I guess from an investor point of view, the investors have been watching both how their plans form out, and secondly, how the ecosystem itself is playing out. And I feel a lot of people became very comfortable early part of this year to go, okay, this is a risk we want to take. And, when you're investing, and by no means am I qualified to make a statement for all the investors out there, but personally speaking, and with some of the colleagues who are here, ultimately you're investing in risk, and it's how much of that appetite you've got, and if that can be de-risked in some shape or form, not necessarily by governments approving it, but if you look at the overall ecosystem and well, there's fundamental IP here, it isn't just another idea, it's somebody's trying to build something long-term sustainable, and there's core IP underneath it, then why wouldn't you invest? Because the downside is, as John Doe once said, you can only lose the money that you invested, right? So if you put in $1 million, you can lose $1 million, but the upside could be 100x, 10x, 1000x, who knows? And if you're an investor, that's ultimately what you're investing in risk, and it's what price is that risk that you're buying at.
Well, Bitcoin's clearly proven to be very resilient, and I think that that's creating greater confidence for those people looking to invest in the ecosystem. And in terms of what we're seeing today, in terms of deals, entrepreneurs, financings, in many ways that's the tip of the iceberg. The things that are actually happening that we don't see, there's a great deal of that. And there's some other massive financings in the works right now, which we're participating in. So you're going to see a number of big announcements. I think, were we on that panel together in Vegas in December? Yep. Predicted that we'd see over $500 million of venture capital flow into the Bitcoin ecosystem this year. I think we will end up exceeding that number, which will put us on par with, I think, 1996 internet. So I mean, the industry's maturing. The number of companies being started. Actually, one of the main metrics I like looking at is everything other than the Bitcoin price. And if you look at sort of what's going on in Bitcoin in every fundamental, whether it be number of tweets that have Bitcoin mentioned in it, number of GitHub repositories that have Bitcoin mentioned in it, number of companies on AngelList with Bitcoin mentioned in it. If you look at every single metric that you can find, every data point is up and to the right. The only one that's stagnant is actually the Bitcoin price to some degree, which leads me to believe that we're probably going to see some sort of rally, and I'm continuing to go longer.
What I would say is the large amounts of money that are being raised, and something which is becoming more and more apparent, if you compare it to 95, 96, or even 99, companies were raising large amounts of money because they were in dire need of that cash because they needed to spend it either for infrastructure or for customer acquisition or marketing. And I've had the privilege of seeing a number of balance sheets of Bitcoin companies. Most of them aren't actually spending any of that money, so they're raising chunks of money, whether it's $1 million, $2 million, 5, 10, whatever it is, and some of them are already profitable or very close to profitable, so they're using that to fund operations, and some of them obviously deploying that capital into the actual currency itself. So it's a very different dynamic. If you look at a traditional tech company, if you can call a traditional tech company, something which we've got familiar to over the last 10 or 15 years, where they're raising 100 million and they have got a 2 or 3 or 4 million burn rate per month. That isn't the case in Bitcoin companies. That's got its positives and its negatives, because a lot of the companies aren't growing as fast as they should do, because there is first-time founder mentality here that I've got this money, I've got this 5 million, it's an insurance which I have, whereas as an investor, I would have been far more comfortable that if they've raised this money, do a strategy, and what are you going to spend this money on, and go out and do this land grab. So there still seems to be, yes, we're very interested in building something in the digital currency space, and it's a high risk and it could be huge, but on the same level, nobody's actually actioning that by using the funds that they're raising to go out and do this land grab. So that's a bit baffling to me, and I'm not quite sure why that is the case in this space.
Well, one of the things that may happen as well, and I don't have any of the backstory here, even as an investor, but I saw Bitfury and some article talking about them potentially listing on the New York Stock Exchange. If we see a Bitcoin company go public on a major exchange through a non-reverse type structure, that will certainly wake up pretty much every institution that's out there, and at that point, again, you'll see a lot of capital flowing into the markets here.
What happens if that company goes public and it crashes?
I think you're still going to end up, let's go down that potential scenario. Well, it depends on how quickly that would happen, first of all. And I think once everyone's been woken up to the market, what that really does is it's causing them to become engaged. And once you become engaged, it's really that first moment, and for all of us, I'm sure we've been there, where it's called, okay, I've heard of Bitcoin, I've heard of Bitcoin, I've heard of Bitcoin, God damn it, why didn't I get into this earlier? Is sort of that attitude, and that's the sort of thing that makes people pay attention, do some homework, actually spend some time learning about the business, what's actually going on here. I mean, most people still think Bitcoin is just a digital currency, and don't actually understand much more than just that today. And I think any time that you're getting people engaged with the ecosystem, certainly large pools of capital, like the institutions that would take notice of something like that, it's a positive thing for the industry. Even if there was a crash and burn type scenario, yeah, we'll end up with some more salacious headlines, but I'm sure there's going to be many more of those anyway.
A lot of the issues and quite frankly opportunities in the ecosystem revolve around adoption and taking friction out of the system. And depends on whose math you want to believe. The number of wallets out there are somewhere between 5 or 7 million. If you look at Wences at Zappo.
Number of wallets, I think we're above 7.
7 million, yeah, above 7 million. So Wences had this data point where about 100,000 wallets a day are coming online. I think that's maybe on the high end. But how do we get from 7 million to 50 million to $500 million? What do you guys see as the evolution of that? How does that actually happen?
The emerging markets, Southeast Asia, Africa, Latin America. It's not going to be here in the UK, and it's not going to be in the United States. It's going to get us to those numbers, I think, anytime soon. It's when Africans recognize the utility of this. It's when people in Malaysia and Indonesia and the Philippines recognize sort of the utility of this platform in these places where you have limited infrastructure. It's the ability for these regions to essentially be on parity with the developed world from a financial infrastructure perspective, and Bitcoin has all of that infrastructure. And I think that's where you'll see us go from 5 million to 50 million to 500 million, sort of users.
Having been through a similar journey in consumer adoption with Spotify, right? And Spotify has got over 10 million paying users. I just talked to somebody outside who's like, you must be very happy. And as well, there's over 1 billion people who listen to music online every day. So we've managed to get 1% of those people, right? There's still 99% of the audience who we could potentially tap who haven't embraced it yet. And what are the reasons? And I think there's a psychological shift that needs to happen. The one thing that gets very little coverage is the power of the telcos. So, once the telcos started embracing Spotify, and I want to use that analogy because it's very relevant to this, it gets to the mass reach. Pre-installs on phones, people get comfortable using a certain application. If you were to compare, it's very easy to compare Bitcoin to what's going on with M-Pesa in Africa. But what most people don't talk about is it's actually owned by the telco, right? And they're the majority telco who've got, I think, over 65 or 70% market share in that country. So there are external forces that need this to help get to where it needs to be. And I'm pretty sure all of those organizations, I've talked to a number of telcos around the world who are actively looking at how can they get involved, but at the same time, their core business isn't digital currency. So they're saying, can it help with churn? Can it help with payments? Will people use more of their services? Because if you're a telco, what you want people now to do is rather than using voice, you want them to use data. So there's a lot of fringe effects that are going to take place before this goes mainstream. And then personally, my biggest concern is Bitcoin has a huge branding problem. It really has. There's this distributed effect. You just have to look at the actual Bitcoin logo or the icon or the corporate identity. It doesn't exist. I'm not saying it should be, but at the same time, who's then talking to the telco, right? What ends up happening is you have the individual companies talking to one person at the telecommunications company rather than a coordinated effort, which would actually help in this industry.
That's a great point. So lots of companies in the room here, lots of wallet companies, exchanges, mining companies. What are some of the key trends or the key companies you guys are most excited about in the ecosystem today?
Well, I'm fond of everything going on in the sort of multi-sig wallet environment, and that's, I think, the main way that we're going to avoid another Gox type scenario, which is you shouldn't need to give someone else control of your money. Even if you want to utilize those banking type services, and with a multi-sig environment, I think this will be avoidable going forward. I can't imagine we could have another Gox next year as long as we as users of these platforms demand sort of multi-sig type environments. So we've invested in BitGo, we've invested in BitVault, like what Ryan Singer is doing as well with Crypto Corp. So that's an area I find interesting from a wallet perspective. Clearly, anywhere that you've got a direct relationship with a consumer. I'm a consumer sort of entrepreneur by background, so consumer-facing businesses that have direct relationships with end users I find to be an area I'm always interested in, assuming you can attract a critical mass of users. Exchanges, again, right now most of what I'm doing is still sort of Bitcoin 1.0. It's what I'd call basic infrastructure, as you said, roads, bridges, tunnels, because until that basic infrastructure is laid, a lot of the Bitcoin 2.0 opportunities are not there. And then, so I'm still very interested in the 1.0 stuff. In the 2.0 sort of categories, I like everything going on from a crowdfunding perspective. The Swarm guys are here, and there's some cool stuff from a token perspective. Most of the investments I make today are in equities, so they're still traditional financings. And most of my token or coin-based investments are in Bitcoin and I guess some of the new protocols. I love what the Ethereum guys are doing. I know Gavin's here. I haven't seen Vitalik, but I guess I like everything. And I guess the main thing that I'm looking at when making an investment is, I guess, the team more than anything else. Human capital is the key to anything being successful.
Jack, what are you excited about?
I guess mine's slightly different. One, whilst I do represent Horizons Ventures, which is the investment arm of Mr. Li Ka-shing, most of my investments have been personal, so it's my personal money. And having been an entrepreneur, it takes a long time to get to this stage where you're successful with the company, and in my case, then start investing. So one, why are people building companies, right? So if you look at something like Chain, I love that company. I'm not an investor in that company, but I see why they're building it. There's an actual need for it.
I'd like to be an investor in that company, by the way.
On the other side, I meet 3 to 4 people a week. It's like, hey, I'm setting up a new exchange. I'm setting up a new wallet. Right? Fascinating. Explain to me why. Right? I get the market opportunity, but why is yours going to be better? Right? Do you have better IP, or have you worked out a new way of doing it? Because if that isn't the case, then the only reason why you're in Bitcoin, because you're a capitalist and you're an opportunist, and hey, there's absolutely nothing wrong with that. And I'm not trying to, be negative on it, but I meet so many entrepreneurs who are like, yeah, this is the cool thing to do, right? So, and I often use the term, in the 80s, it was everyone wanted to be in a rock band. In the 90s, everyone wanted to be a DJ. Last decade, everyone wanted to be a web designer. And this decade, everyone wants to be an entrepreneur. And to put the icing on the cake, you want to be a Bitcoin entrepreneur, because the coolness factor in the geek world is pretty high up. There's like, yeah, I'm working on a Bitcoin company. So why are you building this company? So that's one thing. 2, if you are building something substantially amazing, there shouldn't really be any issues with you being able to raise the cash. And I think we should also look at the wider picture here. On the angel investing side, it's very easy to raise funding at the moment, because if you look at UK, especially with some of the government initiatives, EIS, SEIS, anyone who's got a half decent network can go out and raise 250 or 500,000 pounds or dollars through 10 friends or 10 individuals who are putting in 20, 25,000. And it actually gives a completely wrong impression, because you've got an idea, maybe the right, maybe the wrong one, and you go out and raise this money, and it's money raised from the wrong types of investors, because they aren't going to be able to top up when you need real money. But you're like, well, that was easy. I raised 500,000, so I'm going to blow this. And then you hear people going, well, yeah, we're busy working on our A round. I'm like, okay, so how many of your existing investors who put the money in your angel or your seed round are going to top up? So, well, none of them. And you've made that fundamental mistake day one. And I would urge every entrepreneur, and if I'm teaching you how to suck eggs, I do apologize, but it's the biggest challenge facing entrepreneurs today. You're raising the wrong types of seed capital, right? And you're raising seed capital from people who've got an investment in 30 different companies like you, because they themselves find it very cool to be an angel investor. So bringing in the wrong type of money at the wrong time can destroy your business. So what happens is you've raised this capital, you've got to somewhere, but you've run out of cash way before you thought, because shit normally goes wrong and you have to pay to fix this. You're then out there, and rather than building your product, which you said, well, I'm going to build the most amazing bit of technology which can revolutionize this, you're busy spending your time at conferences and talking to VCs. I appreciate it's a part of doing business, but as an entrepreneur, your core time should be spent on your product, in my opinion. So I think we are going to see, and it's great, right? Everyone can pat each other on the back. And here he raised 250 and he raised 500. Nobody ever talks about the casualties here of the people who have raised the funding and then who realize how tough it was going to be to raise a follow-on. And I think this is something which is not talked about, and entrepreneurs, especially in the Bitcoin ecosystem, because most of the VCs aren't even investing, right? So they're spending their time living in hope of raising money from people who are never going to invest in them, and whilst their company is going down the path. Sorry to have gone on that little rant, but I thought it's something which people should be aware of.
I think it's sage advice, because I think you're right. A lot of people are getting angel money, maybe unqualified angel money. At the same time, entrepreneurs are in unprecedented waters for access to capital. Never before was there an angel list super angels, Swarm. There's so many new channels, app tokens, so many new channels to raise capital like never before, on the blockchain, off the blockchain. Brock, you're a prolific Angels List investor. You're one of the top 10 syndicates on Angels List. What do you have to say about this?
Well, crowdfunding and these new channels for accessing capital is certainly changing the landscape for entrepreneurs, but in the way that Shaq has pointed out, that first stage of financing, venture capital is milestone-based financings. You get a certain amount of capital and you have to achieve some sort of significant milestone with that capital, typically, to be able to raise additional funds. You're not going to typically get more money unless you've accomplished something significant. And you need to do that with the funds that you've raised. And typically through the crowdfunding channels, you're dealing with angels, and most angels are emotional investors. They're excited about what it is that you have to offer right then and there. And they're normally not going to be behind you if you don't deliver on something very significant. If you have the right sort of investors behind you, they're going to dig a little deeper. There'll be a little bit, better understanding of the nuances of some of the accomplishes that you may have had. If you can get high quality investors, by all means, work with those deep pockets that are going to be interested in following on and financing your next round of financing, and help build a syndicate around that to the extent you can.
So there's lots of entrepreneurs in the crowd today. We talked about funding, the types of crowdfunding, angel funding. What other advice do you have for guys in the audience today in terms of when they pitch you? I've got two kind of nuggets here that I typically like to promote. Is a lot of companies that approach me or us in the various deals that we do. They don't have a good wallet strategy. So it might be an ATM that doesn't have a good wallet strategy. It might be an exchange that doesn't have a good wallet strategy. I always try and promote the fact that wallets will be a very important piece of real estate long term. And a lot of these models have transactions that produce good transaction revenue, good transaction income, but over time they lose the relationship because the wallet will somehow go to somebody else. That's number one. Number two is user interface, usability, design. When somebody says, what should I do? What should I emphasize in this app? I said, your line item on usability, on design, on your app, multiply that times 2, 3, 4. Just make it beautiful, make it gorgeous, and make sure that you kind of make this a creature comfort kind of an app that's easy to use. So what advice do you guys give entrepreneurs?
So on the building the product, I'm in no position to give advice, because if I had that kind of knowledge, I wouldn't be sitting up here. I'd be busy running a company building the next generation wallet. So I can't give advice on that. What I can say is, let's not discount the fact that if you're building a company in the Bitcoin ecosystem, let's put Bitcoin to the side. You're still building a company. The fundamentals of running a company still apply. HR, finance, and every entrepreneur you ever talk to and every investor said it's all about the team and it's all about execution. If you aren't paying those people properly, right, that team's going to fall. Nothing to do with your idea. So the core fundamentals still apply to any startup, right? Make sure you've gone through what the challenges are going to be. Are you operationally capable yourself? If not, do you have those capabilities with you? Just do not think because this is Bitcoin, the rules don't apply. And I'm not referring to regulation or governments here. I'm referring to common sense of running a business. Because if you look back to what happened in 1999 or 2000, I remember I was just getting started off in the internet company, there was a similar pattern, right? Couple of guys who had this idea going, well, this is, we're going to build an online home delivery for shopping, et cetera, et cetera. VCs are giving them term sheets. And then you've got 3 individuals, in their early 20s who have no logic of logistics, operations, finance. They have the vision and they know where the internet's going to end up. And a lot of those companies failed, not because the idea wasn't there, but because it was executed, implemented badly. So my advice would be all the relevance of running a business still applies. It just happens to be in a very high risk, forward thinking environment.
Brock?
I normally make sort of a decision in terms of my interest level in a deal within the first 30 seconds. That's call it 95 to 99% of the decision, is how well can you convey your idea, and you convey it in a way where I become confident in what it is that you're attempting to do, and the rest of it's sort of confirmatory due diligence. But it's really, make sure you've got your sort of elevator pitch, because I don't have time to spend an hour understanding what everyone is doing as much as I'd like to. Learn how to be clear and concise and deliver your story in a very short fashion. Other than that, it's ultimately the rest of the team. Who's your technical co-founder? Who's the sort of evangelist for the deal? And normally those two people are the ones that I want to see. And how long have you known each other? How did you end up getting into business with each other? Because businesses, certainly early stage businesses, you're going to run into lots of problems. It's never going to be easy. Anyone that says, hey, yeah, this is going great, it was really easy, that doesn't happen. Building a business is really, really, really hard. And that early team it's almost like a marriage. And I want to know that you guys are going to be able to stick it through, because you're going to run into a number of challenges along the way. So, and that's one of the problems I've seen with a number of sort of deals in the space. A lot of the entrepreneurs are sort of deal hopping, and see a new shiny object and on to the next one a month later, and it's like, well, I'm not sure I want to get behind financing a group of people that are not going to be able to stick it out and spend a year or two working on a business, because it's going to take at least that long before you're going to have any real traction and deliver a great product and create any real value.
The human capital component in Bitcoin, the war for talent, that's going to start to really heat up. I had a conversation with Charlie Lee at Coinbase, Litecoin, just well-funded headline company in the ecosystem. And I'm like, Charlie, you must have the pick of the litter in terms of people that want to work for you. And he's like, well, not really, because everybody that I want to work for me is starting their own company. It's like, that's kind of the dynamic in this space these days. So let's maybe open it up to Q&A and give the mic up to the room. A lot of shy entrepreneurs here.
I guess just two things. One is, are you actually advising entrepreneurs not to take monies from places like AngelList because follow-ons are more difficult or things like that?
I wouldn't say AngelList in particular. I'm more referring to, and I see it a lot more in London, purely because this is my home ground, where people are taking money from people who want to dabble in angel investing. And I think it's a very different thing. They happen to have a friend who worked at Google. So if you worked at Google, that doesn't mean you know how to predict the future of the internet. You may have been a product manager in the ad serving department, or you may be a salesperson in the AdWords department. But I hear all the time, oh, I have a friend at Google, he's willing to invest 25,000. Or I have a friend who works in a coffee shop, he's willing to invest 25 grand. Doesn't mean he's gonna help me pull off the next Starbucks. That's what I was trying to say. The wrong impression is left by the small amounts of money being taken from individuals. That's where I was coming from on that.
And how do you guys think about valuations? I'm an angel investor. All these huge rounds are kind of setting a bar. It's, how do you deal with that?
So from my aspect, as I mentioned earlier on, is what is the risk priced at? And I'll be very honest, when I make an investment, I tend to mark it down to zero or very close to zero, because it's so high risk that ultimately I know that this could result in me not making even the money back that I put in there. And then you have to start comparing in, what the opportunity size is, what the risk factors are, the likelihood of hitting benchmarks, and then it's whatever your appetite combined with what the market's dictating out there. There are certain deals which are overpriced, there are certain deals which are underpriced. BitPay, I invested in, let's put it this way, when I invested it was in single digit millions. And I called a friend of mine up and I said, who's an investor, said, there's this deal, would you like to participate? He's like, you're crazy, this thing isn't worth more than a few $100,000. They just closed their round at 150, and he'd called me up going, hey, do you reckon there's any chance of me getting involved? And I said, well, why would you want to get involved now at 150 when you didn't want to get involved when it was single-digit millions? He's like, well, my appetite's bigger now, and a lot of the risks that were associated have been removed. So ultimately, that's where the valuation, in my opinion, comes from.
I like to overpay.
We'll leave it at that. I think we've exceeded our time limit. So I want to thank Pamir and Gulnar for putting on an amazing conference. And please join me in thanking our panel.
Thank you.